Binance recorded a net inflow of $212 million in USDT over a 24-hour period, according to exchange flow data. This means that $212 million more in USDT was deposited onto Binance than withdrawn during that time. USDT is one of the most widely used stablecoins for trading on centralized exchanges, and its movement often signals the intent of traders to deploy capital. A net inflow like this can indicate increased activity on the platform as users prepare to trade, open positions, or post collateral for derivatives. Binance is the largest cryptocurrency exchange by trading volume, so a significant inflow of stablecoins there can have broader market implications. The 24-hour timeframe is important. A single-day inflow is a snapshot and not necessarily a long-term trend. Without similar figures in subsequent days, it's more likely a short-term shift in positioning rather than a structural change in how traders are allocating capital. The most common reason traders move USDT onto centralized exchanges is to access liquidity for spot or derivative trading. Binance's infrastructure, market depth, and user base make it a key venue for such activity. A net positive movement of stablecoins onto the platform suggests that more traders are choosing to enter positions, possibly in. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Anticipation of volatility, or in response to macroeconomic factors. Withdrawals from exchanges typically indicate users moving funds to self-custody wallets, DeFi protocols, or other platforms. The fact that inflows exceeded outflows in this period suggests that Binance-specific demand was higher than the pullout of funds. This could mean traders are preparing for increased market participation or adjusting their risk exposure. It's also worth noting that stablecoin deposits represent ready capital. Unlike volatile tokens, which may be held for speculative purposes, stablecoins are often used as a base for trading or hedging. The $212 million figure reflects capital that is likely ready to be deployed in the near term. The significance of this inflow depends on the broader context of market conditions and trader sentiment. If this is part of a pattern of increased stablecoin activity on centralized exchanges, it could signal a shift in risk appetite. However, a single-day inflow is not enough to draw long-term conclusions. Traders will be watching whether this movement is sustained or a temporary shift. The next signal to watch is whether Binance sees continued inflows of stablecoins in the coming days. If the trend continues, it could indicate a broader shift in market positioning. If it reverses, it may suggest traders are pulling back or reallocating funds elsewhere. The movement of stablecoins is a key indicator of market activity, and Binance's position as a leading exchange means its inflows and outflows can influence broader market sentiment. The mechanism behind these movements is straightforward. When users deposit stablecoins onto an exchange, they are often doing so with the intention of trading. This could include buying Bitcoin or Ethereum, opening futures contracts, or converting into other tokens. On the flip side, when users withdraw stablecoins, they may be moving them to cold storage or using them in decentralized protocols. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Stakes here are significant. A large inflow into Binance suggests that traders are either preparing for increased market participation or reacting to a specific catalyst. This could be a major price movement, a regulatory update, or a shift in macroeconomic conditions. The next signal to watch is whether this inflow is followed by similar activity in the coming days. If it is, it could indicate a broader trend of traders moving capital onto centralized platforms. If not, it may be a one-off event with limited long-term impact. Either way, the movement of stablecoins remains a key barometer of market activity and sentiment.